Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, it's 4 a.m. doing some technical analysis. I had a wild night and want to give a bit of a public service announcement. Make sure you've got some liquid Benadryl on hand. I was home alone, ran over a wasp nest in my mower, got stung a few times, never had really any reaction, but I certainly did this time with the swelling face, swelling hands, bloodshot eyes, chest got tight. Almost had to call 911. I almost passed out, but ended up jumping in the cold shower and making my way down to CVS and getting some liquid Benadryl just in the nick of time, but it was a big wake-up call. So make sure you got liquid Benadryl on hand because you never know when you're going to need a shot of antihistamine or ideally adrenaline. Gonna have to look into an EpiPen from here. So we're all right now, and we'll check in on SPY. SPY is giving us the most likely scenario that we've been looking at for weeks at this point, which is the equilibrium and tightening range. The bulls defended the August lows. We were too extended in the short term on the 4-hour and the daily time frame when we headed down to those levels. And so we've seen a very nice bounce resulting from them. So we're going to be looking for a break sometime in October from this range. And October 30th is the FOMC. Right now they're pricing in 80% for a rate cut. And it might take until then before we see a break of this current range. With the close today, we are currently, closed yesterday, we are currently about $8 from the all-time high, $8.30, and we are currently about $12.50 from the low. So we are much closer to the high than the low, but we're looking for a top to be set on this bounce next week. And I like this setup right now, and I said midway through the day, I hope we close strong at the high of the day to make direction easy on Monday. And what I mean by that is I want to see a gap up open. I want to see the bulls get exhausted as possible on this bounce just to be looking for a daily lower high because anything under 298.46 is a daily lower high. And then we're just going to look for healthy consolidation to pull back for a daily higher low. The size of the bounce at this point is giving us plenty of space to find that daily higher low. And it's the kind of thing where if I'm looking at day trading on Monday, I want to see a strong start and just say, okay, bulls are too overextended for me to like a bullish entry. So I'm only going to be looking at bearish entries. It eliminates one half of the equation. If I don't see any setups that I like for a bearish entry, then I don't place any trades. Or maybe I take a small loss if the bulls keep surprisingly going up all day on Monday. But that's just my mindset where if we can start strong on Monday, keep an eye out for a temporary top to be set and for consolidation to follow through. Hourly time frame for SPY didn't consolidate really at any time on Friday. So again, stronger open, and the RSI on the hourly is going to be approaching 80, which will be overextended. IWM bounce, weaker. We're looking for anything under 153.35 to just be a lower high. And the weekly support level is holding here as well, but not as well. If we're looking at the midway point, we're about $5 off of the low. And as far as resistance goes, we're about $10 from that resistance level. So IWM still favoring the bears. And the question is, can we change daily trends? Can we top out on all of these sectors, top out on the bounce, come down, hold that low, and then confirm the daily trend change? If we confirm daily trend changes, the odds that we stay in this tightening weekly pattern will increase. It'll just increase the length of time that we're anticipating staying within this pattern. QQQ, significant bounce, resistance approaching of 190.59. We held the August lows here as well. Have to change the daily trend when we top out, but there's no sign of a top at this point. Keeping in mind that just like SPY, the next hourly consolidation that we see, or the next consolidation period, we're just going to be looking for an hourly higher low to form. So even if we say, let's say we start Monday where we closed and then pull back to 187.50, that's still an hourly uptrend. So don't lose sight of the bigger picture on the hourly chart if we're seeing weakness on the 5-minute time frame starting Monday. XLF bounce as well. Anything under 27.92 is just a lower high. And we have to change the daily trend and see a higher low and higher high to remain within its channel, but easily holding the weekly higher low. XLF bulls had more space to work with than almost any sector that we look at. The healthcare sector has seen a big 2-day bounce. So resistance is 90.68. We're going to be watching that level, and we're going to be watching for the daily trend change, keeping in mind that we already lost weekly support. Right now, it's the financial and the tech sector showing they're more important than the healthcare sector, because both of those names held their lows of August, as did SPY, where XLV did not. So obviously, those names have a greater weight in the S&P 500. Biotech sector topping out. So remember, it started with an extra day, almost 1 day in advance for the biotech sector. So the question is, are we going to see topping out days Monday and all these other names? We're just looking at a resistance level being hit, the exponential 12 period, and we need the daily trend change just like everybody else. And XBI is also in a weekly downtrend. So the healthcare sector and the biotech sector are in weekly downtrends with lower highs and lower lows. The financial sector and the tech sector are not yet. We're still holding weekly higher lows. And as we look at the VIX, weekly chart, low, high, higher, low. It looks like our lower high is being set. All week we were watching 2160 as a key level, and we rejected hard from that level. Still in a little higher low pattern on the daily. Bulls need to hold 1580 to keep that intact. And we'll see if we can change the daily trend for SPY. We'll be looking at a lower high on the VIX and potentially a lower low. So congrats to the bulls that bought this dip, but it is time to be watching for some consolidation. It's also the kind of setup where if you made bullish entries looking at this pattern, you're either looking at the August lows, you're either locking in gains on the way up or you're setting stops at break even and hoping that this weekly equilibrium breaks bullish. If you're a swing trader, I'm more of a day trader, but if you're a swing trader, with where we stand in this range right now, there is a bearish entry to be had approaching, as we've been talking about. On that bearish entry, again, you're either looking to lock in short-term gains or you're setting your stop at break even, because best case for the bears would be a start to the pullback and either just a dump to lower lows, which is less likely in my scenario, or in my opinion. But if we form a higher low, fail to break resistance, and then roll over, then we're going to test those August lows. So potentially putting yourself in a position to test those August lows or go out break even is a great way to trade. I love trading break even. I do it all the time. And that is, or I should say, I love setting myself up where worst case scenario is a break even trade. And that's the next trade here. As far as if you're looking bullish, I don't like this spot right now. It's no man's land for bulls at this point. And it would be just waiting for clarity. This is the kind of pattern that I look at on the weekly time frame, and it really doesn't matter what time frame it's on. If this is on the 10-minute or the 15-minute time frame or the hourly time frame and I'm day trading, I would say, okay, I don't really like any clarity. I'm going to wait for this range to break. So there's nothing wrong with being patient and waiting for a break on this weekly range before reestablishing positions based off of that break. And ideally, the tighter it gets, the better, because that is when we usually get the most follow through. So that's where we stand. Short term, we're looking for temporary tops. Mid-term, we're looking to stay in this weekly tightening range for at least another week due to the size of the bounce and the amount of space the bulls have to work with. Get some liquid Benadryl. I appreciate you watching, and we will see you soon. So the end of video content for the next week or so is going to be from my recent trip up to New England, and it's going to start off here in New Hampshire. It's really cool to go back to places that I grew up going to. My dad used to take us camping back when I was 6 years old, so 25 years ago, going back to the same places. And that's really where my love for nature was sparked as a little kid, and being, blown away by wonderment of huge rocks and these cool boardwalks going through caves and things, which you'll see. But that was a whole bunch of nostalgia this past week, and was able to meet up with a bunch of friends that I went through grade school with that I still keep in touch with, and some family. So all good, fun stuff. The leaves were just starting to change, missed it probably by about a week or two, but that let us have a little bit of solitude, because you better believe that that area gets flooded with leaf tourists right now, pretty much through October. And this one area that we went at about 9 or 10 in the morning, and we were the only people there. So definitely worth the payoff to not have the full-blown foliage, but to experience it and be able to do so with a little bit of solitude.